Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame, where we're looking for a finished leading diagonal to the upside in wave 1, a finished wave 2, and now want to see a bigger wave 3 to the upside, where a generally regarded minimum target is the 1.618 trend-based fib extension taken from the start to the end of 1 to the end of wave 2, sitting at 67.5k. After a wave 3, we are looking for a bigger sideways corrective structure in a wave 4, and then one more push towards the upside in a wave 5 to finish a bigger 5-wave impulse 1, 2, 3, 4, 5. After wave 5, we then want to see a 3-wave corrective structure to the downside, after which we then look for continuation to the upside. We do have some resistance above us. At the moment, we have hit the golden pocket taken from the high at 70k to the low. Golden pocket, always important, currently acting as a little bit of resistance. Right above us, we have, however, a daily naked point of control at 63.1k, and we almost hit it. We just missed out. Would be nice to hit, to be honest. But then we have the more important areas to the upside. Blue box here, 64.6, 65.3k, then 66.3 to 66.5k, and then finally just above the 1.618, 68.1 to 68.4k. The bearish scenario is a 3-wave structure to the upside, labeled as a finished wave A, also a leading diagonal, finished wave B, and then a 5-wave C to the upside, where the most common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of B, and at the moment we have hit the 1-to-1 here at 62.6k, with the 1.236 sitting at 64.5k. After a wave C, you want to see a bigger range forming and more weakness, because we want price to move towards the downside and look for a bigger retracement to the downside. An important level you want to hit in an ABC would be the 0.618 at 57.6k, as that would increase the probabilities for an ABC towards the upside and the potential for more downside to come. If we then look at the channels, then what you see on the chart here is a base channel, and a base channel is important for the bullish scenario. What we are looking for with a base channel, which by the way is taken from the low to the low of 2 to the high of 1, is for a wave 3 to break out of the base channel. So what we want to see is a wave 1, 2, and then a wave 3 to break out of this base channel, not having this little blip, but actually having a solid move out of the base channel. For a wave 4, we like to come back to the base channel and then one final push up for wave 5 before we then start the corrective structure. At the moment, you can see we only moved above the base channel, like little blip, as I said, right? Absolutely minimum. That's not what we want to see. We want to see continuation in a wave 3 and also preferably see the 1.618 touched, which, as you can see, is nicely positioned out of this base channel. So that is what we're looking for the bulls. Looking at the trend channel, which is a channel taken from the high of wave 1 to the current high on the chart to the low of wave 2, then what we want to look for is a potential wave 4 or a finished ABC. So if price would now move towards the downside and break the lower trend line of this channel, it increases the probabilities for an ABC to the upside and potential more downside. The only bullish alternative you then really have is going to be a wave 1, 2, another 1, 2, and then a bigger wave 3, which would be even more bullish, but it really depends on the corrective structure to the downside if you break this channel, because if you see a 3-wave corrective structure and then a move up, very bullish, right? Potential for a double 1-2. But if we see impulsive structures to the downside breaking the lower trend line of the channel, that is bearish. But at the moment, we haven't broken the lower trend line of this channel. And what we are looking for, preferably in a bullish scenario, is for the lower trend line to not be broken at the moment, but price to continue moving to the upside. And if it does, we are going to move this channel to the new high every time. Now imagine the high is right on top of the 1.618. Then we take the channel from the high of 1 to the high of your 3 at the 1.618 to then the low of your wave 2. And what you now want to see is eventually price breaking the lower trend line. And the moment the lower trend line is broken of the trend channel, the probabilities significantly increase that we are looking for a wave 4. So it's a little bit of confirmation. And then after wave 4, we look for a wave 5 towards the upside, right? So this is what we're looking for with regards to the trend channel. At the moment, preferably, we are not breaking the lower trend line of this channel. Looking at the CVD divergences, then most of the bullish CVD divergences have all played out over here as well. Higher low in price, low CVD played out very locally here as well. At the moment, on the 15-minute time frame, we have a little bit of a bearish CVD divergences here. Lower high on price, higher high on the CVD. The target would be this low on the chart. If price moves to the upside above this high at 61.5k, the bearish CVD is invalidated, but pay attention, we might always create new potential bearish or of course bullish CVD divergences. So we have a little bearish CVD divergence at the moment. If we then finally look at the probabilities of the different scenarios, I have a little bit of a story for you because I do like to add some context. So on the 1 hour time frame, right, what are the probabilities? Now, let's put some things in perspective. Price hasn't really broken out of the base channel just yet, right? The trend channel is not broken to the downside. The target for an ABC is hit. The target for a wave 3 is not yet hit, right? We rejected at the golden pocket, as I have shown you earlier, but I don't really have any horizontals here. If I open all my folders, the main horizontal above us is a daily naked point of control at 63.1k. And if you've been here for a long period of time by now, you know that the horizontals are very nicely respected, and preferably we hit them as confluence of resistance or support. We are still above the white support resistance box, which is this box over here. We ranged in this box for a short period of time, and last night with the update, during this range here, I said the probabilities are much higher to move towards the upside. We now got that move towards the upside, but of course now this box over here can act as an area of support for a very simple support resistance flip. The market structure at the moment has not changed. We are creating higher highs and higher lows at the moment. And something that I haven't shown you just yet is that we also on a daily time frame have moved back inside this daily range. So you can see the support resistance area here, an important support resistance area on the chart, played an important role over the past couple of months. And now we have moved above this SR level, potentially of course retesting it. Now this level is between 59.2 and 60.4k, and the next important SR area is above us at 64.6k to 65.6k, which is very nicely in confluence with the blue box over here that I mentioned earlier, right? So that's a nice little bit of confluence. So what we now want to keep an eye on is a new local range forming, as after a push, a new range will give us all the information that we need, and it is still quite a young range and potentially a retest of the white boxes on the cards. Of course, we'll have to wait and see. Potentially with the bearish CVDs, we might make it down there. In a wave 3 to the upside, what I do like to see is a continuation with bullish CVDs forming with each new range. So that is something that I will keep my eye on. I want to see higher lows and higher highs, and when a new range is forming, I like to eventually see price grind back again towards the upside, making higher highs, higher lows with continuous bullish CVDs, and that will increase the probabilities even more to move towards the upside. That is something that I'll pay attention to. So at the moment, you can arguably say, well, we're in quite neutral ground, right? We hit the target for a wave C. However, arguably, the probabilities are higher for the bulls at the moment to at least take this high out once more, as long as we don't see significant weakness. And at the moment, we don't yet see significant weakness, right? We haven't seen a market structure change. We haven't seen any support lost. Right, we don't have any big moves towards the downside. Price is just ranging here at the moment. We don't see any impulsive structures to the downside, right? A big 5-wave impulsive structure, or at the moment a big multi 1, 2 and a 3 to the downside. So far, price is just moving sideways. And we also still have an untouched daily naked point of control just above us at 63.1k, which is quite interesting, and some more and better resistance to the upside. So as long as we don't see significant weakness, the probabilities would be on the side for the bulls, and that is of course important with regards to risk management and management of potential trades that you're in. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.